The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining us. We've got the Dow up 68 points right now. S&P just slightly positive, up 50 cents. Composite up 14 bucks. Small caps slightly negative, down about 29 cents. Microsoft up 44 ticks out here. Leading the charge, the upside, you've got Intuitive Surgical up 46 bucks right now. That's up about 9%. Google right behind them, up $43 and change, up 6%. IBM up 12 bucks. That's up 6%. Cree is up 6 bucks, up 17%. Having a great day. Apple up a percentage point, up $5, trading out at 509. To the downside, leading things to the downside, you've got Coach off 9 bucks. That's down 15%, 15%. Quest Diagnostics off 7%, off 421. Laboratory Corp down 3 bucks and change. Praxair off 3 bucks. Fossil down $2.65. General Dynamics off 2.5 bucks. Amazon down 270, and Tata Motors down 2 1/4. Oh, I can't forget Weight Watchers losing a little bit of weight this morning, off 2 bucks and change. Our call-in number is 877-927-6648. So the Dow's up 67 points right now. How many stocks, just a question, how many stocks inside the Dow do you actually think are up right now? Yeah, Dow's had some real strong days, real strong sessions. How many stocks do you think, with the Dow being up 77 points, or 70 points, let's call it, are in the green? Well, I'll answer that for you. You knew. Let me count them. 1, 2, 3, 4, 5, 6, 7, 8. 8. 3 of the stocks are up a penny, or 1 penny to 3 pennies up there. How about that? So really, you've got 5 stocks that are actually up, all being led by IBM. What's that all about? It's all about understanding the weighting structure with inside an index. In this case here in the Dow, IBM is the number 1 weighted stock out there. So you've got IBM totally pulling the Dow up. However, you've got the majority of the Dow 30 stocks that are actually in the negative out here. We're going to start off by taking a look at, actually, I'm going to switch that. That was my segue into taking a look at the Qs. Because the Qs, as you know, the NDX 100 has been the weak link out there, being led by, really, Apple, by one stock. And I'm going to prove that to you. I'm going to show you, I'm going to at least lay something out so that you can take a look at it. And as we do take a look at the Qs, because of the nice pop in Google, because of the nice pop in Intuitive Surgical, you are seeing a gap up today inside the Qs. Of course, what we know is that the Qs have been traveling sideways inside the gap up from the January 2nd candle. The low of that session here is 66.48. The high of that session is 67.23. You can see that the entire consolidation out there, which has been about a couple of weeks, well, since the January 2nd time frame, is there's even the candles where you had the Qs moving back to test the bottom, which is now a very well-tested support area. They ended up still having bulls come in towards the end of the session and winning the battle, at least pushing the Qs up. Now, as you know, when you're in a consolidation range, any consolidation range, they high probability, and I put that in the 80 percentile range, high probability that's going to resolve itself in the direction that it came from. Well, that becomes pretty easy on the Qs. Now, as far as the how far will something jump, it's usually the length of the consolidation range. Well, it's not really that much when we take a look at the Qs. The top of the range, somewhere around 67 bucks and change. The low part of the range at about $66 and some change. So a little over $1. So if you take a look at $67 and a little bit of change, we just add $1 to it, you'd be at about 68 level. And 67.72 so far has been the high inside the Qs out there. So that's the Qs. Now, if you come back and you take a look at off of the session high out here inside the Qs, the NDX 100, you come back to the September 19th candle, $70.58, all the way down to the low on November 16th. What you can see is there's a black line of that I've got out there as a resistance area drawn. That's really on the downdraft. That downdraft being the October 9th level. That price is 68.34, just above that area. would be the 0.786 retracement. You can see where the consolidation was taking place was all along the 0.618 area. This points to the Qs testing that level being somewhere around $69. I'm just going to, $68 and change. So we're just going to call it, let's call it the high, the 68.34 level of October the 9th out there. So everything right now pointing towards that is where the Qs want to travel to. But we talk about the Qs being a weak link out here. Now what I'm going to do is going to go to an equal weighted index. So because we know that we've had the small caps, right, the IWM, the Russell 2000, well above its highs, at least with regard to taking a look at the swing points. We know that the New York Stock Exchange, the larger breadth of the marketplace, is, it's not near its session highs, but it has shown a lot of strength on this last move up. So we know that. We know that the weakness here, and the markets aren't going to move anywhere. Now, look, the markets are absolutely overbought. You do not chase markets here. What you do is you wait for pullbacks, and of course you measure those pullbacks based on volume coming out to give you an idea as to whether it's more of a correction or a pullback out here. But you do not need to chase this here. I show you the reasons time and time again, so I don't want you to chase it here, but I do want to try to put things together for you, and part of that is taking a look at the equal weighted index. And all of the counterparts, most of the indexes, I think it's really all the indexes, all of the S&P sectors all have an equal weighted ETF that's out there. One of the places to get them from is a group of funds called Ridex. Now, I believe they changed their name a couple years ago. They were bought out a couple years ago by the Guggenheim Fund, so they're slowly changing their names over. And I'm going to go to, I believe it's one of the Ridex funds here that I'm going to go ahead and pull up. If not on this one, it is on one of the others. We're going to call up the QQEW. EW standing for equal weight. So now we're going to take a look at if, in this case here, we're not taking Apple out of the equation, but all of the stocks inside the Qs, all 100 stocks, getting the same weighting in there. And as we take a look at that, you can see price in this ETF is at 27.70, taking out the swing point highs here from March 27th. So you can see that on the equal weighted side out here, taking Apple out of the equation, this is why you really want to understand. I'm just really trying to help you understand that it's so important for you to understand the underlying instruments with inside whatever it is that you trade, whether it's the XLE, the XLF, could be the SPYs themselves, and just try to put this together and understand it. You're also looking for divergences in the marketplace out here. So you've got the equal weighted version of the Qs out here. Again, that's the QQEW. Now, you'll see here on the stock chart, this is not a ETF that you would trade out here. It's not liquid like the Qs, but maybe it helps you to really put some things together. You can see the equal weighted version moving into the extreme overbought condition, but it is up over its highs, just like we saw in the small caps, just like we've seen in the New York Stock Exchange. And quite frankly, it really bodes well for the market. Now, the market should be pulling back, will pull back here at some point in time, most certainly. And that's where, as I say, we want to go ahead and measure volume as it's coming, because there are enough divergent patterns out here that say that this could be more than just a pullback, that this could be a real significant market high that's being put out here. Whether you follow the VIX and go take a look at correlations between the VIX and market highs, or if you'd like to see that, you don't want to do the work, just go test out my newsletter service, Mastering Probability. That's one of the charts that was featured in there. So if you're looking for an education, you're looking to understand these markets, test drive it for 30 days. Now, you have to put down a $149 deposit. Why? Because I know if you pay, you'll pay attention, but I absolutely will educate you. And 29 days later, if it's not for you, just nothing out of your no sweat. And there's all kinds of education. So QQEW, I'll give you another. Let's go take a look at a couple of other weighted versus non-weighted. Let's take a look at the energy sector. So the energy sector, XLE, let's go see what the actual energy sector is doing here. And then we're going to go compare it against, now that is a weighted structure for sure. And in one of the ways, if you want to understand some of the structures, inside, just in the case of the spiders, if you want to understand the S&P, just type in SPDR. to your search engine, and it'll take you to a page where you can understand the weighting structure inside there. You can understand the components. They change daily. I think I've got this here. I can go ahead and pull this up on the screen here. Here is the SPYs. So if we take a look at the SPY themselves, you can see the number one weighting inside the SPY is Apple, 3.5%. Number 2, ExxonMobil. Well, that's going to be part of the energy sector that we take a look at. If you put in XLE and wanted to see what the energy sector weighting was, then you would. In fact, we can actually do this here. We'll do this live while we're on the air. I should be able to pull up the energy sector. This will take just a moment, but we'll see what the actual weighting structure is inside the weighting structure. Give me a second here. We'll hit the holdings button. So ExxonMobil is 18.5% of the energy sector. Chevron, 15%. Schlumberger, 7%. So what is that total right there? That is 18, 23, 33. That's 40%. So 3 equities represent 40% of the weighting structure in there. You go down just to the next 3. 6 of those equities represent 50%. The other 6, Occidental Petroleum, ConocoPhillips, and Anadarko Petroleum out there. So it's very important to understand the weighting structure inside of whatever it is that you trade. Now, back to what makes it easier to trade the energy sector is there's only really 6 stocks that you really need to be paying attention to understand whether they're completing patterns, whether it's A to B equals C to D patterns or retracement patterns, or what do the candlesticks tell you. And that's what you want to do on anything that you trade out here. So now let's come back to the energy sector. Let's see what the energy sector is telling us. The energy sector right now is trading into the swing point from September 14th. So you know when you trade into a swing point, you go take a look at the volume. Are you coming into it with volume, with lighter volume? And as long as you trade inside it, it says that you can go test the highs. Well, the September 14th swing point has volume of 15.2 million shares. And you can see as you came up into it yesterday, a little bit light. You came up into it with 10 million shares. You came up to it with 13 million shares as we came back here on Tuesday. So you closed inside it. Today you're closing back below that level. So far, 1 million shares. If it does close below the price point in the energy sector, if it does close below the 76.02 level, you'd have a rejection of a swing point on price and volume. If you close back inside it, what it says it wants to go spike up and test the high, which would be 77.35. So the number on the energy sector that you're looking for is 76.02 in order to release information. Now you can go down to ExxonMobil, you can go to Schlumberger, see if they are, maybe we'll do that. But first let's go to the equal weighted index of the energy sector. And let's just go, and I haven't popped it up here. So let's go see what it is. And this is one of the RIDEX funds. And this one for the energy sector is the RYE out there. That is the, so we're going to go ahead and pull this up. And again, don't trade this because of the illiquidity here, but this is a great index to track what the equal weighting is going on inside the energy sector. And as we take a look, let me just throw a couple of tools out here, and we'll see if this is really doing the same thing. And if we take a look at this index, what we see is this also trading into that September 14th swing point. So not going to pay attention to volumes here, but we've got these same 2 patterns really doing the same thing out here. That's a good thing. Now, you don't see any divergence as we speak. So we get back, we'll go take a look at ExxonMobil and Schlumberger, see if we can get some type of feel for what's going on inside the energy sector. 877-927-6648. Dow's up 67, S&P flat up 61 pennies. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow at 59 points, and we're ripping apart the energy sector, or part of the energy sector. So we're going to take a look at the top 3 holdings inside there and see what it is that we can see. So what I've got up on my screen, if you're just listening in on the radio or your mobile device, you can catch the archive of this show on Channel 10. I'll describe to what we're looking at here. We've got Schlumberger up on the screen. SLB is the ticker symbol. Now, we're going to take a look at a couple of different things on this chart that I'll just simply point out to you. Number one, if we just simply take a look at that relative strength index, you can see it's up in it's over the 70% level, and that means it's in the overbought condition. So you wouldn't be chasing this equity here. Where you want to be buying from, you want to be buying from these lows here. And you want to understand when it moves up towards this oversold or overbought condition, can it travel higher? It most certainly can, but where you want to be a buyer, it's going to go ahead and correct. It has to correct. It's just a matter of when. It's a matter, and you'll see some candle formations sign up. You'll see some candle formations form when this occurs. But where you want to be a buyer of any equity, any index, any ETF, any currency, you want to go ahead and have patterns line up. You also, from a pattern standpoint, you want to see buying from the lower part of, in essence, relative weakness. You want to buy weakness. You want to sell strength. If you take a look at just simply Schlumberger, each time that it gets up into the upper portion of its relative strength index, you can see it starts to form a top. You had that occur back here in the February time frame of 2012. February, the end of February is where it really backed off, formed an A to B equals CD down. Of course, as it got down and formed that A to B equals CD down pattern come into the April time frame, that's where you wanted to be a buyer. It bounced up, didn't get all the way to the top of the relative strength, but you can see as it got up there, went ahead and pulled back, made even a larger A to B, equals CD down. Where is it that you want to be buyers? You want to be buyers as you are coming into the bottom of that relative strength area. That's not where you're at right now. Now, let's go take a look at this. I want to show you it works on all time frames, all charts. It's just a matter of being patient. And that's really what this game, this business is all about. It really is a matter of patience. Now, if we take a look at Schlumberger, what did Schlumberger do? Schlumberger gapped up on July 25th. Didn't do it with any significant volume, 10 million shares. The day before was 6.5 million shares, but it formed that little gap up there, which ended up the bottom of the breakout session, July 25th. That black line going across the screen here ended up being an area of support. So we know where support is on Schlumberger. Important support because it's been tested several times out here, and that's going to be the price point of about 67.46. Where would you want to be a buyer of this equity? Well, you'd want to be a buyer of this equity as it pulls down into that level. Each time it pulls back into that level and it moves towards the bottom of the oversold territory, you've gotten a bounce. So you can see this is a very important area of support. Now, you do have a high volume gap down, and that was the session of December the 14th out there, 27 million shares to the downside. That was tested. The actual low, let's see if the low was tested, which is 67.60. Actually got down to 67.64 with 6 million shares versus 27 million shares. That's the type of test that you like to see. That occurred on December 31st out there. So it occurs on December 31st, comes back, tests an area of support, gives you a nice bullish engulfing candle. You can see the session before relative strength-wise. If I take a look at the actual number, it wasn't down at the 30 level, but it was down at the 38 level. You had that nice bullish engulfing. So you want to try to buy from the lows. You want to sell from the highs out here. Now, what is happening? Well, we're seeing it looks like a little consolidation pattern. However, the trading session from January 18th, it had some nice volume. It was 14 million shares coming into, didn't get to it, coming into the swing point from the 14th of September. So you got the same swing point that it's dealing with. Coming into with volume says what? When you're coming up into a swing point with volume, says you're certainly going to go test it. And if you close inside, it says you want to go ahead and test the highs. Well, in the case of Schlumberger, the test is not done yet. That test would be $78.47, 8.6 million shares. Yesterday's volume, not bad, 9.6 million shares. That also suggesting that the high wants to be tested. Has not occurred. Today, 1.3 million shares. So I believe this was the number 3 weighting inside. Let's take a quick peek here. Inside the energy sector, Schlumberger is number 3. Chevron, and that's 7% of the structure. So if you trade the DIG or the DUG, you absolutely want to be able to go back and do an analysis of Schlumberger or all the equities. You want to do the same thing with ExxonMobil. You want to do the same thing with Chevron. If we take a look at ExxonMobil here real quickly before we come into the break here, we'll just pull the chart out. And ExxonMobil getting ready to move into an area of resistance. That is the gap down. So it's testing the November 6th candle out there as it is getting up towards the overbought condition. If we come back and take a look real quickly here at Chevron Mobile. Chevron Mobile looks like that is completing several A to B equals CD patterns out here. No bearish candles yet, and it's coming into an area of resistance. That's the gap down from October 9th out there. That's how you put it all together, folks. 877-927-6648. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. Dow is up 46 points out here. Where we're going to get our first message in the market today is going to be coming from the Russell 2000. That is the weak hands in the market. I actually have the 30-minute chart of the Russell up on my screen. It has formed a to B equals CD down, just a 1-to-1 level. It's trading right now at 895. It's also made a 0.382 retracement. No bulls have shown up yet here to support this equity. We'll see a bullish sign out here at some point as it moves its way down into that oversold territory of the relative strength. If we put up this tool here, I'll put it up real quick, we can see that it has made a 0.382 retracement as well. At the same time, it's making a 1.618 expansion of the most recent swing point here. This is from the 4:30 a.m. swing point up that from the low there, which is a price of 896.30 up to the high that was put in at 7:30 this morning. It's why even though if you don't trade the futures contracts, you still want to have access to it. You want to be taking a look at the patterns there. You can use this if you trade the TNA, the TZA, or you trade that, which is the triple ETFs, or you trade a double. What you want to do is you want to be taking a look at this chart here, and you want to be paying attention. Now, yesterday when I did Tom's show, the first hour, so right around the 4:30 time frame, I gave you one of my trading secrets out there. I'm not going to go ahead and do that here, but go listen to the archive of that show. It's on the homepage of TFNN.com. It's only up there, I think, for like 5 days. So this should might be 5 days from today or 5 days from yesterday, and you want to go take a look at that because it will help you from a intraday trading standpoint. So we can see here, as we just watch it unfold in front of our eyes, we can see we've got a nice expansion of a swing point, and we have a nice retracement of a swing point, and we have an A to B equals CD down. Now that C to D move here, we can see we're on the inside left of this area, and all we have to do from a fishing exercise, all you're now doing is you're sitting back and you're waiting for the market to communicate to you what it's going to do, what it's going to, what is there going to be buying that's going to come in? If there's going to be buying that's going to come in, what you're going to see is you're going to see some form of a bullish candle, especially as the relative strength indicator moves down into that 30 level. So all you have to do is sit back and wait and put all of these tools together. I did mention that the Dow is now up 49 points. Let's go take a look at the actual index and see what the index did here today. And so far, it completed a 1-to-1 A to B equals CD. That A to B equals CD pattern starting off with a November 16th low. That's at the 12,471 level. Your B point is the December 18th high. That's 13,365. Pulls back into low of December 31st out here. That is the 12,883. The 1-to-1 A to B equals CD. Price projection, I wish I could read that number. It looks like it's about 13,007. I don't know. Well, let's see what it actually hit today. 13,786. So must be 13,779. How do you like that? 13,779 hits 13,786, pulling back just slightly. Now, what we can see here, so that was the first target. So the Dow has hit the first target of an A to B equals CD up. You can see on the bottom indicator, you can take a look at the relative strength. We're up at the 71.61 level. Why is that important? Well, take a look at the last time that we were up in this range was back in September 14th. The number was 71.37. Today, right now, we're sitting at 71.62. What did the Dow do? What the Dow did was it really moved sideways, slightly lower to work that area off. Moved just slightly higher on October the 5th out here before it went ahead and gave it up in a fairly large way out there. That's why you do not chase. Don't think that you've missed out on the move. You only missed out on the move off of the November 16th or December 31st area. Can it go higher? Absolutely. You want to wait. You want to have that same patience, just like in taking a look at the 30-minute chart on the Russell 2000 or a 10-minute chart, whatever it is, the time frames. You just want to have the patience. What this is telling us, most certainly on that C to D leg, is it could easily move higher because you've got a more powerful move off of that C to D leg than we had off of the November 16th lows out there. But we did complete, or the market did complete, a 1-to-1 A to B equals CD. Now you sit back for patience and until you see the bearish candles out here. If you take a look at coming across the top, as the high was hit on September 14th, you had one little dark cloud cover candle. That was on September 17th. Really got erased over those next couple of trading sessions out here. Where you really got the bearish candle formation was on October 9th. October 9th, between October 5th and October 9th was where it went ahead and it gave you the bearish candle signals out there. That's after it getting back up towards the top of that relative strength indicator. If we take a look at where could the Dow then travel to next, well, combination of factors that you would look at. One would be nothing more than expansions of swing points. So you can take a look at really two that would stick out to me that I would look at. So let's take a look at both of those. The first one would be coming off, we're going to use the September 14th. Let's use the real one, which is the October 5th high, because that was a little bit higher high than September 14th, down to the low on November 6th and November 16th. And so it's the 1.272 expansion. That takes you into, which is going to be, we're going to call it 14,000. What you can also see here is you can see a 1 to 1.272 A to B equals CD up. That would take you to 14,000 inside the Dow. Am I saying that's where it is going to go? We're at 13,758. No, it's where it could go. What I know is patterns are completing, and all you have to do is wait for the bearish candle signals to tell you that the move is over. Until that time, all you have to do is just sit back and be patient. If you're long, do you need to get out? No, you need to know that you've just simply, you're hitting some areas where you would expect to see reversals. You tighten your stops. You do whatever you can to protect your trading capital because one is forthcoming. Where is another where's another expansion of swing points that we can use? Well, we can just use the C to D level. Let's just see what we've actually did here on this C to D level. And on the C to D level, well, we're above the 1.618. I think I have to. Let's go see where the 2.618 level is. I'm going to go ahead and put that in here right now, 261.8. And we got a line going across the screen. Okay, that should pop up on our screen. So let's see where 2618, well, that's way the heck up there. That's at 14,144. Let's go see where the 2.0 level is on the C to D expansion. Oh, that didn't grab it. Give me a second here to see. Okay, let's bear with me. I don't have that built in here, but you're going to watch me do it live anyway, so that works out just as good. Now we're going to go add the 2.0 level inside here. And these are nothing more than, this is the tool that allows me to identify exactly what ranges I want in expansions and contractions. The 2.0 level, just slightly higher, looks like maybe about the 13,850-ish level. So all you've got to do is just sit back, be patient. Here's what the Dow did. Let's go take a look at the Russell 2000. So let's pull that up on the screen here. We'll use the actual daily index here. Let's go see what that did. And the Russell 2000 really trading right inside that 1.272 expansion of swing points. And those swing points being the September 14th high down to the November 16th low. You can see the Russell 2000 in that extreme overbought condition. If we take a look at this, I'm going to go ahead and pull this off the, I didn't mean to pull that off the screen, but I'm just going to pull off some of these patterns out here, just so we can take a look at it. No bearish candles yet today. The most bearish candle I suppose you could get on the Russell 2000 would be a close below 891.08. That would set up a bearish engulfing candle for you on the Russell 2000. Let's go to Orlando, Florida, just down the street from us, to our man Rick. Rick, thanks for calling. Thanks for holding. How are you today?
I'm doing fine, Steve, and thanks for being there and doing what you do every day.
Hey, my pleasure. I love it. My pleasure.
I was listening very intently to you earlier about the XLE and then Chevron and XOM.
Okay.
And back to the XLE, and you talk, you're a candle man. Some of the other fellows aren't, but you are.
I am a candle man, baby.
I'm
a romantic candle man.
Candlelight.
There you go. Man.
I see. If it closed the way it is showing today, we would have a harami. Is that correct? An XLE?
Well, let me pull that up on the screen here. So we've got the XLE. Yeah, if it did, and what that is, it's not a reversal candle. All that is, it's telling you that it's kind of a timeout. So,
a pause.
Yeah, so that is not a reversal candle. That is a pause candle. That's like hitting the pause. That's like, watching a movie and hitting the pause button and you're going to come back.
Very good. I'm glad you clarified that because I've listened in the past to you talking about I love shooting stars and I love hammers. Oh boy.
Yes, absolutely.
Because they seem to work. That's why.
Well, they do work. What they're great with is now hammers get tested much more than shooting star candles do, but what they're great is identifying areas of support and resistance. And the cool thing about both of those candles is it really identifies where the bulls and bears are. And if you're taking a long position, you want to be drafting the bulls. And what it means is on a hammer, when you get a close below, my expression is if you're long, you're wrong. It just means close out the trade. Wait for the next signal. It could be just slightly below it. You could be getting back in the trade. You never know where a market is when it busts through an area of support where it's going to go to. But if you're patient enough to watch the candle formations or other patterns out there, it can't disguise itself. That's the cool thing about it. And so that's why you just try to limit your. This is a game of capital protection and preservation.
Yes, sir.
So you are right. You potentially would have a bearish harami candle, but that's not a reversal signal, just a pause.
Okay, so pause and wait.
Yeah, and really in the case of the XLE, which is the easiest. I would say that is the easiest of all of the sectors to trade because you're dealing with, in essence, really 5 or 6 stocks that make up half of the weighting structure there. And you can just on a separate sheet of paper identify what patterns is it completing. And once all those really start coming together, that's when you... Now, from that standpoint, if you start to see some pattern completion there, even though you might only get, let's say, a bearish Harami or something like that in the XLE, if you get enough confirming signals on those equities, then that would be reason to go ahead and take a trade.
I see.
Does that make sense?
Yes, it does, because right after you were talking about going to the spot.
Uh-oh. Sounds like we lost our connection to Rick. Well, maybe Rick will give us a call back and we can go back to Rick there. So we're talking about the XLE. In the meantime, while we work through those technical difficulties, let's go back and take a look at MasterCard. MasterCard down $4. The reason why we look at MasterCard is because that has been one of the stronger stocks out there. So we look for strong stocks to identify a message of the market. So MA is the ticker symbol there. We've been watching that here for a while. Let's go take a look at the volumes, and then we'll go back to Rick. I see we've got him back on the line. We'll go back to him in just a moment. And as we take a look at MasterCard, MasterCard's got some, it's starting to break down. You had some pretty decent volume. Yesterday was 746,000 shares. Today, already almost 200,000 shares, 160,000 in the first 45 minutes of trading, and that's starting to pull back into the January 2nd level. So look for MasterCard. If MasterCard does break down through the gap, which would be 501 on January 2nd, that would be very bearish out there. But as I stitch all these candles together, it's already giving us a bearish signal out here. That's on MasterCard. Let's go back to Rick. We were talking about the energy sector, the XLE, and so if you pay attention to just those top 4 or 5 equities that make up more than 50%, that can give you also a better indication because you're looking at the underlying instruments of what it is that you're trading.
Yeah, excellent. I appreciate it. Sorry about the disconnect there.
No, that's okay.
My Mickey Mouse phone system here.
Hey, and that means that you're supporting Orlando. It should be a Mickey Mouse phone system there because it's the home of Mickey Mouse.
Everything's Mickey Mouse here. Cool.
That's a good thing.
I see now, after putting that all together, what you said now, I can see why the energy sector is a good target for trading, period.
Well, it's the easiest one. If you really want to trade the SPYs, you'd have to go after 50 stocks. I think it's 70 stocks. The top 70 stocks make up actually 50%. That's a lot of work to do. You don't have to do that. It's not the only ways to trade. But, you go take a look at the financial sector, the XLF. Make sure you understand what and because you can download that spreadsheet each day, so it becomes very easy. I think in the financial sector, it might be 10 or 13 stocks, and you're just looking to get to where your weighting structure is over 50%. And then that helps you to really get a good idea of what's going on.
And then use the consensus of that 50%.
Yeah, because in this case here, what the energy sector, when we took a look at Schlumberger and we took a look at ExxonMobil, we took a look at Chevron, each of them were suggesting that they might have a little bit higher to go.
Okay.
So a pause says, okay, I'm just gonna rest here, and then they're gonna wait for that higher test out there. But I was just really walking folks through it. I haven't done all of the homework that I would do in testing that, but in essence, that's what you want to do out there.
Excellent. Oh, thanks so much for your help, Steve.
My pleasure, and thanks for calling back. We appreciate it.
Have a good day now.
Always good to hear from you. You bet. So as we go into our break here, folks, you got the Dow is up 49. S&P is pulling back. It's down 2 points right now. The composite is up 7. Russell is down 2 points. If we go back here, take a look at the 30-minute chart of the Russell 2000. You can see no bulls showing up here as of yet. And that is where we're going to get our first information. If the market is going to pop, what I would be paying attention to is the Russell 2000. In fact, if I go ahead and put all 4 of the ETFs, you can see the Russell is the only one. Well, you've got the ES Mini is also headed down towards its oversold territory. So the Russell and the ES Mini are where you will get your first signals today. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 52 right now. S&P off 1.5. I've got so big day today. After the bell, you're going to have Netflix. You're going to have Apple. SanDisk, Western Digital, just to name a few F5 networks out there. Apple going to be the big one. As we take a look at Apple here, I've got a 5-minute chart on the screen. What we can see yesterday, Yesterday we have this little linear trading right from the get-go, right from the open. That's a prop desk. That is a signature of a prop desk, just simply getting rid of additional shares of Apple. At least one prop desk doing it, stabilizing volume on the way down. Just that linear move. That is the signature. This is my hypothesis, by the way, but I think it's a pretty good hypothesis. When you see this is a prop desk getting rid of their shares here. Of course, this works on the 5-minute chart as well. You can watch Apple as it moved down into the 11:40 a.m. Time frame yesterday, getting towards that oversold territory, finally getting above the candle from 11:40 there, really stitching everything together. You get a bullish engulfing candle, and now it's kind of taken off here by moving a bit higher on the daily chart. If we take a look at the daily chart, is there any meaning behind this? Well, right now, you're back up above the this hammer candle back here from November 16th, but no real clues other than Apple as it got to the oversold territory on the daily chart, as it broke that hammer candle on January 15th. All it's doing is working off that condition, and it's doing that by moving sideways to higher, and it's still down below the 50% level, so that's not bullish. It's really more bearish, and all it's doing today is really testing the most recent swing point high out here from January 17th. That is 510.75. 16 million shares that day. So far today, 7 million shares, so it's got some volume in it. But stay tuned, because at 4:30 today, we'll see how the market responds, and most likely more so in the morning tomorrow. Now, if we go back to let's go back to the chart on the Russell 2000 out here. So now we're taking a look at the Russell 2000. We're taking a look at that 10-minute chart. I said bulls would show up, and they won't, and they can't hide. And right now, as we know, on the 30-minute chart, we were taking a look at the patterns that were out there. Let me just switch to the 30-minute pattern. I've got the 10-minute pattern out here, so just trying to put it together for you on more of an ultra short-term standpoint. So the 30-minute pattern, which we're going to end in 4 minutes, could very easily end with a hammer candle. If this closes at about the 895 level, 895 and just a tad, maybe 895.60 today, 95.60 right now, maybe 895.80. Would give you a nice little hammer candle. So that's that. Just coming to the 11 o'clock session as you're at a 0.382 retracement. This could still run a little bit lower. If you don't get a hammer candle on a 30-minute chart, you don't jump in. If we take a look at the 10-minute chart out here, the 10-minute chart is trying to form a bullish engulfing candle. We'll see if it can. And what it would need to do, it would need to close this 10:50 session, this session out here at 11 o'clock. I knew I could get this right. It would have to close at or above the 895.40 level where it's at right now. So you can see on the 10-minute chart here, 10-minute chart getting into, and so stay on the time frame that you trade here. But as I said, the signal that we will get for any bounce doesn't mean that the markets close higher, move higher, but for any bounce is going to come from the Russell 2000. Now, let's say you were an intraday trader out here. Is it the Russell that you would take the trade on? No. You're using the Russell because it is the weak hands here. Where you would take your trade is on either of the two futures contracts that are showing strength. Right now, that is the NQ. You can see the NQ not anywhere near its oversold territory, nor the Dow. So you use the Russell 2000 as the trigger mechanism to trade one of the other ETFs. Always, when you're buying, buy strength, and when you're selling, sell weakness. It's as simple as that, folks. Or sell strength, but buy weakness. You got it. Folks, stay tuned. Basil Chapman will be up next. I'll be back with you tomorrow. Don't forget, we've got Larry Pesavento today from 12 to 1, Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve, the warm-up band for the Tom O'Brien Show. He'll be with you from 4 to 6. Thanks, folks. Have a great Wednesday. Look forward to seeing you in the morning.